Gold and silver are entering a critical part of the market, and the next major move could be much bigger than many traders expect. After weeks of volatility, gold has climbed back toward the $4,400 area, while silver is holding above $64. The big question now is simple. Is gold preparing for another breakout toward $4,600? And more importantly, could silver accelerate even faster if gold breaks higher? As of the latest trading session, spot gold finished around $4,375 an ounce, while silver closed near $64.99. Gold gained roughly 0.9% over the week, extending a 2-week advance of more than 8%. Silver also continued higher, gaining about 2.6% for the week. So the bullish momentum is real. But there is an important detail. Gold has not yet broken through the resistance that could confirm a much larger move, the $4,400, $4,600 zone. Gold is now approaching a major technical area around $4,400. Recent trading pushed the metal above that psychological level before sellers stepped in. That tells us there is still significant supply above the market. But if buyers can establish a sustained breakout, the next objective becomes much more interesting, $4,500. And beyond that, $4,600. A move from the current area toward $4,600 would represent a meaningful continuation of the recovery. Interestingly, several institutional forecasts have already placed gold around this region. ING currently expects gold to average around $4,600 per ounce in the fourth quarter of 2026 after lowering its previous forecast because of higher yields, a stronger dollar, and weaker ETF demand.
And JP Morgan has maintained a longer-term bullish outlook, with analysts expecting gold to move toward approximately $6,000 by year-end 2026, so $4,600 isn't an unrealistic number. The real question is whether the market has enough fuel to get there. And that fuel could come from the Federal Reserve. This is probably the most important part of the current gold story. U.S. economic data has started to weaken. July retail sales unexpectedly fell 0.6%, marking the first decline in 9 months and the largest drop in 14 months. Core retail sales also declined, while consumer sentiment weakened sharply. The combination of weaker spending and relatively soft inflation data has reduced expectations for an immediate Federal Reserve rate hike. Reuters reported that policymakers are likely to feel less urgency to raise rates in September following the latest inflation data. That matters enormously for gold. Gold doesn't pay interest, so when expectations for interest rates rise, the opportunity cost of holding gold increases. But when rate hike expectations fall, gold becomes more attractive. And that's exactly what we've been seeing. The dollar has also weakened, creating another tailwind for precious metals. But there is a major risk. There is one factor preventing this from being a straightforward bullish setup: oil. Crude prices remain elevated because of continuing uncertainty surrounding the Strait of Hormuz and the confrontation involving the United States and Iran.
Brent crude is trading around the upper $80, while WTI remains around the low $80. That creates a complicated situation for the Federal Reserve. If oil prices remain high or move substantially higher, inflation could become sticky again. And if inflation refuses to cool, the Fed may have less room to ease policy. That could push Treasury yields higher and potentially strengthen the dollar. And those two factors could temporarily pressure gold. So we have two competing forces. On one side, weak U.S. economic data, lower rate hike expectations, and a softer dollar. On the other, higher oil prices, geopolitical risk, and elevated Treasury yields. That battle will determine whether gold can finally break higher. Now let's talk about silver. Silver could actually become the more explosive trade if precious metals enter another momentum phase. Silver is currently hovering around $65. The first important technical hurdle is around $65.44. If bulls can break and hold above that level, the next targets are approximately $66.83, followed by $71. And if silver clears $71, the market could begin looking towards substantially higher levels. Why? Because silver has both monetary and industrial demand. It benefits from investment flows when precious metals are strong, but it can also respond to expectations surrounding global industrial activity, manufacturing, electronics, and other sectors.
That gives silver a different supply and demand structure from gold, and when investor momentum returns to precious metals, silver can sometimes move much faster. But there is a warning here too. Silver's volatility is significantly higher. A breakout can produce powerful gains, but failed breakouts can also result in sharp pullbacks. What about gold's downside? The bullish thesis isn't confirmed yet. Gold still needs to prove that buyers can absorb the selling pressure around the $4,400 area. If the breakout fails, the first major support zone is around $4,300. A deeper correction could bring $4,200 into focus. So traders should not assume that gold will simply move vertically from here. The market may consolidate first. It may retest support, and it may even shake out bullish positions before making another attempt higher. That's why the $4,400 area is so important. A clean breakout could change the technical picture. The bigger picture. There's another reason the long-term gold story remains interesting. Central banks continue to view gold as an important reserve asset, while geopolitical uncertainty remains elevated. The metal has already demonstrated that it can recover strongly after major corrections. Gold reached an extraordinary high earlier in 2026, and although prices have pulled back substantially from that peak, the broader market remains historically elevated. Trading Economics puts the January 2026 all-time high at around $5,608 an ounce.
That means a move toward $4,600 would not even represent a new record. It would simply mean gold is recovering a significant portion of the ground lost during the correction. And that's why traders are watching this level so closely. So, is gold really about to go vertical? That's the big question. The answer is the setup is becoming more bullish, but the breakout still needs confirmation. Gold is approaching the critical $4,400 zone. A sustained break above resistance could put $4,500 within reach. And once $4,500 is convincingly cleared, $4,600 becomes a very realistic next target. At the same time, silver is holding around $65 and could accelerate if it breaks above $65.44 and then $66.83. But the major risks remain the same: Treasury yields, the US dollar, oil prices, and Federal Reserve policy. The next major U.S. economic reports will therefore be extremely important. If the data continues to show a slowing economy while inflation remains manageable, rate hike expectations could fall further. That would potentially create the perfect environment for gold and silver. But if inflation reaccelerates because of higher energy prices, the Fed could remain cautious and precious metals could face another period of consolidation. For now, the market is sitting at a crucial crossroads. Gold around $4,400, silver around $65. The next confirmed breakout could determine whether we're simply watching another recovery or the beginning of a much larger precious metals rally. And if gold can finally break through the resistance above $4,400, the path toward $4,500 and potentially $4,600 could open very quickly. So the $4,600 target isn't guaranteed, but with weaker U.S. economic data, reduced rate hike expectations, a softer dollar, and persistent geopolitical risk,
The ingredients for another major gold move are clearly back on the table.